Hello everyone and welcome back to another video. Please do consider subscribing if you have not already. I really do appreciate it. Thank you everyone that has subscribed. I see it and I appreciate it. Thank you so much. So let's get right into it, and I will let the cat out of the bag right away. I do not own 500 shares specifically of Tesla. I actually own Tesla only through buying S&P 500 index funds, just because I used to own Tesla. In full disclosure, I used to own a few shares, but then I gave them up because I just could not stand how much Elon Musk was in the news, and whenever he tweeted, I felt like he just was tweeting some garbage and the stock would just go down based on a tweet, and that's not why you should invest. You shouldn't invest in something based on the CEO, co-founder, whatever he might be, president, tweeting. You don't want to see your money go up and down because of his tweets. So that's why I kind of got rid of them, and I said, I'm just going to own Tesla through all of the S&P 500 funds that I buy, because they are actually included in the S&P 500 as of this past summer, and they are actually a pretty big part of like the top 10 holdings of the S&P 500. So that's how I own Tesla, and so that's how I play anything, to see it grow. I'm happy because, it's part of the S&P. So whenever Tesla grows, I see, a pretty good size in the jump in the share price of what I own go up as well. But either way, we'll get right into it by doing a stock analysis on Tesla because it's been a while. So this is just like an update. So as you can see, like Tesla closed as of Friday, October 29th, 2021 at about $1,114. And that looks like almost a 25% downside from where the analysts see it going. There actually is a high price target of 1,300. So someone clearly did see the forest through the trees, and, they have a good perspective on where Tesla might be able to go. So it's kind of interesting to see that. And it's basically a hold. 11 buys, 6 holds, 6 sells. So that's basically a pretty even, across the board. Just hold on to this and, don't buy it, don't sell it. So that's pretty interesting, that's where Tesla is right now. And the stock analysis, it's a smart score of a 7. So that's a minimum that you want to see. In my opinion, at least, you want to see at least a 7 for a stock, so it does at least make that mark of, like, the threshold of the bare minimum. If we look at the quarterly income statement for Tesla, we can actually see that yet again their numbers are growing. Their numbers are growing basically every single quarter, and that's really hard to do, you would think, given that we are in a worldwide chip shortage. Meaning, like, most cars for GM, Ford, how are they sitting, in a field empty somewhere in, Michigan, but yet Tesla is able to push cars and move cars like crazy, and they definitely depend on chips with the size of like an iPad stuck in the middle of the car. They definitely need some pretty powerful chips to run a Tesla, so they are not having any kind of problem creating cars and getting them out the door to customers. So that's pretty crazy to see. And yet again, we can see that they're still profitable. They have been profitable the last 5 quarters, including the last quarter, which was the highest profit it's ever seen. So that's what you want to see. Way to go, Tesla, with that. And if we look at the balance sheet, they actually, again, I forget who the CFO is of Tesla, but they are on a roll. They're actually doing really well. Look at that, cash balance is growing. That is really good to see. Tesla was always cash strapped in the beginning, so someone has clearly, woken up and decided to turn the ship around in a good direction. So we can see that the total current assets are about 26 billion, total current liabilities of about 14 billion, which again is really good. That's what we want to see. Long-term debt, it looks like they might have taken their long-term debt off the table. I'll have to look at that in the cash flow statement, and we'll just see that in a second. But either way, that's really good to see. Total assets 52 million, total liabilities is 29 million, so that's really good. They're on a good footing. Now, if we do look at the cash flow statement by the quarter, we can actually see that debt repaid. Yeah, they've been repaying a lot of debt, so I don't think that they have any debt left. I mean, it looks like they've been issuing debt as much as they have been buying it back, but they've actually been buying back more than what they've been issuing, so that should leave them in a good position as far as what we saw, with probably eliminating all of their debt, which again, let me know when you find an automaker that has no debt. That's like unheard of, unreal. So we can see that the free cash flow is still pretty good, over the last few quarters, and especially in the last quarter, it is still pretty strong. And Tesla's earnings, which just came out like a week ago, in October, you can actually see that they were pretty low as far as what they reported versus what the estimate was in 2020. And then in March is where they started to make it closer to what they reported versus what the estimate was. And then you can see that in later in 2021, so middle of the year and then the last quarter, we can actually see that the reported was much higher than the estimate, which is like, any other tech company was kind of crazy to see Tesla kind of evolve to be like that. They had an earnings surprise of about 50%. It was reported at $1.44 when it was an estimate of 96 cents. So a 48-cent adjustment versus the estimate is about 50% surprise. And they've just had some really good quarters like the last two. And we can actually see that it looks like they're expected to really beat the next few quarters as well. So it definitely seems like it's something worth investing in. If we actually look at a portfolio of Tesla, if you bought $10,000 back in 2011, as far as this is concerned, January 2011 to October 2021, you can actually see that $10,000 is worth about $2 million today in Tesla. So in about 10 years, you've gained 10 and a half years, you've gained 63% CAGR on your money, and especially annual returns. You could see that 57% in 2021 is what Tesla is up right now, 743% last year, 25, 6, 45. Like, that's pretty good if you're just investing for 5 years since 2017 going into 2022. You've got a pretty good growth momentum. Not really any down years other than in 2016. That was it. So anyway, hope you guys did enjoy this video. Please do subscribe, and I'll see you soon.